Okay, good morning everyone. Thank you for joining and welcome to the last of our webinars for 2020. Only right and correct we end the year in the way we started it, talking about our favourite subject, Brexit. My name's Tarek, I'm the CEO at McAlvin's. Welcome also to Kea, who's one of our Associate Directors of Tax, and also Rashmi, our COO. So time is ticking. The UK is just days away from the end of the Brexit transition period of 31st December 2020. But what will happen when the transition period ends? I know we're all exhausted, I certainly am, on the subject of Brexit. The only thing that replaced that this year was unfortunately COVID, and we're going to try and avoid that subject a little bit today because I know it plays on everybody's mind day in, day out. But hopefully we will get the deal the country needs, and that will be that. Otherwise, we will possibly spend the next 3 years talking about rejoining the EU, and I don't think my head could take it. I mean, who wants to take a bet that there'll be a political movement towards rejoining the EU by one of the larger political parties, or a new one called the not-so-UK Independence Party, UKIP, I've coined the name. Anyway, on the 1st of January 2021, after this date, the UK will no longer be part of the EU. It will leave the single market and many of the arrangements that have been made for trade and travel to the continent so easy. At the time of this presentation, and it very much is a moving target, the UK is still yet to sign a trade deal with the EU. There remains a significant degree of uncertainty, which is making it harder for businesses to plan for the future. It's clear that many businesses still aren't fully prepared for what lies ahead, but there are certain steps that all owners can take now to build resilience and ensure their business is ready. Well, let's timestamp this webinar further still. It's 11:33 on the 17th of December. Sky is blue, which I'm very happy to see. I had to change my notes thinking it was going to be great. And Christmas is just a week away. And of course, that's going to be a very different Christmas to one that we may be used to. We can check this recording in 6 months from now and see how our prophecies come true. But for now, Kea.
I didn't get that. Could you try again?
So Siri's decided to join the conversation.
It would be good if Siri can answer that question as well. If Siri knows something, no, Tariq.
She answered, I'm not sure I understand that question. I think that's probably, I think she's probably got the right answer. Over to you. Okay, a quick question. What do you think? Are we going to get an early Christmas present to put our minds at ease on at least one matter? Deal or no deal?
I'm always the optimist, and I think, yes, I think so. We will get it before the new year. But I mean, trying to read between the political terminology that Boris and his counterparts in the EU are saying, there remains a narrow path. I mean, they are not writing it off. The words coming out in the press releases or their press statements were pretty no deal last week, but all of a sudden the tone has changed. So I remain hopeful, and I think so. The disruption that otherwise businesses will face, I think so. Politically, both sides are pretty acutely aware of that. I know we don't want to talk about COVID, but COVID is with us, still there. I mean, I think so. Macron has tested positive this morning, so it remains very much with us, and to have a big disruption of a no deal at the same time, as much as people are preparing for it, and we should. I remain optimistic that we will get it. Now, whether we get it this side of Christmas or the other side, that remains to be seen.
Maybe Macron testing positive for COVID will impact his stance on the fishing rights, and he'll be thinking, well, there's more important things in life than fishing rights, and just let that one go.
His isolation may make the negotiations a bit more simpler. Yes.
Exactly. And Rashmi, your views? What do you think?
Yeah, I think, like Kea said, I think a deal will be done because there is too much at stake if a deal is not done. But just like COVID has changed the way we live, how we conduct ourselves. And I think deal or no deal, the world's going to change. It won't be as straightforward as we've accustomed to. Sorry, let me just switch this off. I've got a phone coming. It's not going to be the same that we've been accustomed to in terms of working with, living within EU, which has been pretty much one nation, very easy for us to travel for holidays, doing business. That's all going to change, even with a deal. And short term, I think there's going to be some big pain points, price rises, shortages. For example, in the UK, January and December, winter time, about 90% of our fresh produce, salads, tomatoes, cucumbers come from the EU. These all have short lives in terms of shelf life. With blockages, COVID, all the bureaucracy that will go on at the borders, apart from price rises, I think it's going to be some shortages in certain food areas. Tesco's already predicting 3 to 5% price rises, irrespective, even whether there's a deal. If there's a no deal, 25 to 30% price hikes. So the world's going to change for us, especially us dealing with EU, trade or no deal.
Yeah, but like you said, maybe short term. Yeah, very briefly, my view, not that different to what UK and Rashmi are saying. I mean, I think Boris has always known what his position was going to be. I think he always knew what he was going to give away. And I think the things that our counterparts are asking for are things that he is willing to compromise on, but wants to show a very strong position right to the last minute, in the hope that he gets everything that he wants.
Yeah.
So let's see. But I'm with you. I think a deal, I think it's pretty much done, and it's just a question of EU giving up something that they're already prepared to give up, and of course ourselves giving up something that we're already ready to give up. Anyway, moving on. Thank you for that, both of you. So during this presentation, we hope to go over what happens next and look at some of the implications that Brexit may have on your business, the staff, suppliers, and customers for that matter. We'll cover quite some ground during the webinar, but our teams are here standing by to answer any questions you may have in the week and months ahead. So what's not covered off here, please do get in touch with your client director or any of us on this webinar. And note we have a Q&A section at the end, so do feel free to raise questions as we go. You should have a little button somewhere on your screen which gives you the opportunity to raise some questions. We did have a question come to us in advance of this webinar, which I think Kay will touch on briefly because it could be relevant to other delegates. And but if we can't get to all the questions at the end of the webinar, we will follow up directly with you afterwards. So businesses remain, very uncertain, even with just days to go on exactly what trade will look like after this. And once this transition period ends on the 31st of December, the UK was said to be focusing on a Canada-style deal, but as negotiations became wrapped in various issues, the Prime Minister, Boris, warned the UK to prepare for an Australian-style deal. All very interesting for those that know a lot about trade deals. But if you aren't an expert on international trade agreements, it may not be clear what the difference between the two deals means in reality, especially when it comes to introducing costly new tariffs. So very briefly, Canada-style deal, if you don't know already, Canada's had a trade agreement with the EU since 2017, not that long ago, you think, known as the Comprehensive Economic Trade Agreement, CETA or KETA, which gives Canada almost completely tariff-free trade in goods. The deal also protects EU geographical indications, as it's termed, whereby products with a specific geographical origin are protected, such as camembert cheese, champagne, Chianti, etc., etc. This prohibits Canada from importing any goods using the same names from another country. So very much like what happened when we joined the EU many years ago. We don't have feta cheese made in the UK anymore. We have Greek style cheese or Greek style yogurt, and so on. The main selling point of the deal are increased quotes on exports, which allow a certain amount of product to be exported before tariffs are applied. However, it doesn't eliminate charges altogether. As an example, under CETA, the amount of tariff-free cheese that the EU can export to Canada increased from 18,500 tonnes to 31,972 tonnes a year. So, roughly double. However, while 98% of products are tariff-free, import taxes do remain on some goods, such as meat, eggs, and poultry. Although these arrangements reduce the regulatory trade barriers, Canada still faces more red tape than other EU countries do when trading with each other. On the other hand, the Australian-style deal, despite all the talk of an Australian-style deal, the reality is the EU doesn't have a free trade agreement with the EU, although one is currently being negotiated. Should the UK trade with the EU, using the current Australian terms, businesses would not have the favourable access to the EU market they currently enjoy, and vice versa. Instead, they would face the EU standard World Trade Organization tariffs when exporting to the continent, and EU businesses would face the UK standards, WTO tariffs, when exporting to the UK. This could mean that cars imported to the UK from the EU could be 10% more expensive. And I'm certainly noting a number of emails coming into my inbox from contract hire companies and so on and so forth that are looking to use this 31st of December deadline as a means to accelerate sales in the month of December. Price of exported milk, cheese, and some meat would increase by as much as 30%. More importantly, the UK's key services market would lose any preferential access to EU markets under an Australian-style deal. In some ways, some commentators have pointed out an Australian-style deal is very similar to a no-deal scenario. Well, time to act, has passed really, but there's still time to do things, and even in these last days of the transition period, there's things that can be done, and there's still things that still can be done in the early part of next year as well to remedy things that haven't been addressed in advance. So, Kaya, I think you're going to take over from here, and over to you.
Thanks, Tariq. Yeah, just had a IT issue whilst you were presenting that, Tariq. So in case I have another disruption, just let Ask Rashmi socially distance from me in the distance, but he can then ping me here. Thank you, everybody, for joining us this morning, almost afternoon now. But yes, trade arrangements. That's really the crux of this Brexit thing, isn't it? How the imports and exports is going to get impacted from 1st of January 2021. No doubt that's really where the focus has been and should be for all the businesses who are associated with imports and exports. Not just that, even if you're a business who does not directly import something, but if your supply chain, is associated with imports, you probably need to speak to them and check their resilience, their plans as to how they have prepared themselves, because we talked about what we think will happen, but you never know with all the political grandstanding what will happen. We want to hope for the best, but I think so it's only prudent that all businesses prepare for the worst as well, and are ready with their plans. How are they gonna tackle the no deal scenario, or a complicated, complex new regime of customs declarations, customs duty, changes to the way import VAT is either paid or reported, and safety and security declarations. And yes, probably it won't be felt straight away in the first 6 months, but as the regimes will diverge over a period of time, all these different pinch points will come into play, and businesses don't. I think there will be some success stories as well out of this, how people structure their businesses, where they operate from, until both sides figure out how they want to make sure that the compliance regime works, and both sides will be at pains to make sure business life remains as normal as possible. There will be people who will try and use those changes to their advantage as well, structuring where they keep their goods, where they sell from the EU. Northern Ireland, we'll touch upon that in a minute, is going to have a dual status. Effectively, they will be part of EU, very much part of the UK, but hybrid arrangement for trades and goods moving in and out between Northern Ireland and UK. But in its latest guidance, the government has laid out some principles about the core model, which relates to all goods imported and exported, regardless of which means of transport is used. And businesses should be reading that with a fine tooth comb to make sure all that how it impacts them is considered with a lot more details and planning. I mean, here on the screen, we can see what businesses should consider, which are the big points to help them business adapt. HMRC will introduce new border controls in the core model in 3 stages up to 1st of July 2021. With these changes coming in, I think so applying for an EORI number, preparing to pay an account for VAT on imported goods, etc. This will be key. I mean, EORI number, the number of queries we've had from clients has been quite positive to know that the clients are preparing for this proactively. But if you have not yet looked into that, it's something that is very basic needed, deal or no deal. So things like that definitely do take into consideration. Customs declarations, that is a big point. By government's own admission, they are worried about the grants that they're made available for people to develop expertise in-house for customs clearance has not had the take-up that they were expecting. So businesses that provide customs declarations have stopped taking on new clients because they know that they will be inundated with their existing client base, even though they've tried to double their capacity with backup outsourced services. But a lot more paperwork is anticipated to come down businesses' way who import or export. Again, just a reminder, there is just not that paperwork. Maybe if you're in a regulated sector or a field food industry, what kind of licenses, what kind of other regulatory environment you will need compliance with, definitely needs looking into. If you just move to the next slide, Tariq, to help with the process now, considerations for trade with Northern Ireland. But before we just look at that as well, to help with all this, there's a lot of information out there, and sometimes it can look daunting. We at McAlvin's have put up dedicated, more bite-sized information on our website, so do use that. But anything specific that you need, please feel free to get in touch with the team here. Moving goods in and out of Northern Ireland or via Northern Ireland into the EU, that requires special consideration. But the government has set up a free trade support service, which I very much encourage businesses to sign up for if you have your business that trades either with Northern Ireland or with EU via Northern Ireland. It's a free-to-use service available to businesses of all shapes and sizes. So do very, very actively consider that. Implications for VAT, that remains a big issue with regards a deal or no deal Brexit scenario, and nobody knows as it stands. But let's just try and see how import VAT is going to change, or based on what government has told us, based on their paper on advice to businesses where things stand. So goods that move into the
I think we lost Kaya. I can't hear Kaya.
Yeah, we've lost Kaya. Hopefully he'll rejoin. So I'll just take over. This is on the flight tonight. Let's see how well I do. So yeah, goods that move into the UK from the EU after the 1st of January. will be considered as imports, meaning import duty and customs duty will be payable. Import VAT will no longer be payable when goods enter the UK from the 1st of January 2021. This will instead account for VAT in all goods imported using the postponed accounting system. It's not actually that dissimilar to the current arrangements that we have with trading with the EU. We deal with VAT on our VAT returns, and it's as simple as that. Before, we had the VAT system that we're currently using with the EU. You had to pay at the border. So you imported goods from Italy, the VAT was due as the goods entered the UK, unless you had an arrangement with customs and excise, as it was then called, to deal with those issues. So I think
I don't know where I lost you, Tariq. There, thank you.
Yeah, I've sort of tried to cover this slide. I think I've done okay, but I've kind of moved into the next one as well.
That's lovely, but that's really the big known side of the VAT that we know so far. I mean, imports will no longer, when goods, what's your tax point of VAT? That is changing big time, because the government is trying to make sure that the businesses that import at the moment are not at a disadvantage. Because if you are a B2B, business to business importer, importing from another business in the EU, at the moment, because both of businesses are VAT registered in their respective jurisdictions, it's quite seamless. As if we live with a different regime, UK government has made sure by using this postponed accounting for VAT regime that it has already told businesses about, you will not be required to pay the VAT at the border, which is a very practical step. I think the government has really thought that through for a change. And yes, the EORI number, again, we mentioned that at the start, very important, will be needed in your declarations. Without that, you may come unstuck, even if you have a VAT registration number. Accounting, not just for the VAT, postponement of the duties payable as well. There's government papers out on there advising businesses that they will be able to use that. That is much more complex regime, and you will probably be relying on your customs clearing agent to have themselves registered for waiver with HMRC. But again, it will be a commercial discussion to be had with the clearing agent, what kind of collateral they need from you to be able to use their credits, with HMRC being an approved importer or approved clearing agent. But generally speaking, most businesses will otherwise not see a cash flow disadvantage just because now VAT has to be paid on imports. The government has made provisions for that. There's a lot of talk about when the timing of the duties and VAT comes into play. But with duty deferral, a business can account for VAT on the import VAT on its VAT return when they submit the declaration. But it's timed with the release of these goods in circulation from one of the following special circumstances, as we call a bit technical points of differentiation of when the goods are considered to be released in the UK marketplace, be it customs warehousing, be it inward processing or temporary admission, end use people taking control of the goods, outward processing, or even a duty suspension regime is in place. Now, if you are in business where customs will be applying on your goods, probably these are new terms and new processes that you need to build into your business flows to take account. Eventually, yes, it will become seamless, but the teething period, the initial 12 to 18 months, I think so, will be a learning curve for businesses, and those businesses that are better prepared will probably thrive more than the others, and there might be a business opportunity to make better margins, I think, as well, if your competitors are not up to speed with the paperwork and the processes. In terms of other VAT considerations, one important thing that is changing, and sorry, Tariq, we said we don't want to touch on COVID too much, but we've seen the rise of online businesses boom in this pandemic period, and high street is struggling big time. And as we all shop more and more online, in this real-time world of delivery right at the lowest possible time, turnaround time, warehouses have been all across various geographical locations. Even though we press something on Amazon, we buy today and Prime delivers it tomorrow, it's not necessarily housed in a UK warehouse. It could very much be still coming from a EU location or even from abroad, if you're buying something from eBay or Amazon and with a 2 or 3 delivery time, 2 or 3 day delivery time. And that is, I think, so something that has changed again as to the VAT timing perspective. And there is this consignment of value of £135 that the government has come up with about how the tax point for VAT for those consignments will change. Imported goods in a consignment not exceeding a value of £135 will not be subject to import VAT at the border. However, the onus of that is moving to the platform provider. So if you buy from an overseas seller, a B2C transaction, that seller, the VAT obligation, HMRC is moving it to Amazon. They don't want it to be stopped at the border and account for VAT there. They are saying that the platform provider will add and collect that VAT. However, the overseas seller will still need to be registered for VAT in the UK because it has to zero rate it sells to Amazon. So a lot of foreign businesses will need UK registrations. But to keep the customer experience seamless, the government has thought about this and says, fine, there's no VAT at the border. So to facilitate this, the old low value consignment relief is being scrapped. For the £15 value is being scrapped. Businesses selling goods to be imported into the UK not exceeding the £135 value will be required to charge VAT and collect VAT due at the time of sale. So everything has moved to the point of sale, but the internal reporting arrangements is an added layer for the business at the moment. So a lot of online businesses will have to prepare for this.
Yeah, and I think, Kay, because I've been following this a little bit over the past couple of years, actually.
Yeah.
A lot of the EU governments, actually governments around the world, tax collectors around the world have been putting a lot of pressure on marketplace sellers and the platforms that they sell from, like Amazon, eBay, and a number of others that are out there that are less familiar, and putting the onus on them absolutely to be the collector of taxes on behalf of the tax authorities. So that was coming anyway, with or without Brexit. So across the EU already now, there's significant requirements for Amazon in a number of countries to be the collector of taxes and passing that money over. So I think from that perspective, probably not too much of a change because it was coming anyway. It is a change, but it was a change that was always on the cards. And I think just very briefly, Kaya, we had a question come in from a client of ours, in fact, that provides marketing services, cross-border marketing services in and out of Belgium. And I just, without obviously mentioning the name of the client and specifics, but maybe you can just, it may be relevant to some of the other people that we have on this webinar. Yeah, no,
very, very relevant, I think so, Tariq, because VAT really, if you try and analyze, it falls into 2 different categories, isn't it? How VAT applies to goods and how VAT applies to services. And services, I'm happy to report and suggest that not much will change, actually. B2B services, the query that we had in that particular case, marketing services being provided from a UK business to a business in Belgium. Well, at the moment, as it stands, because it's a B2B service, the rules practically will remain the same. Now, one way of thinking about everything with Brexit is, if you are dealing with international clients, think about it as if you are dealing with a non-EU client. As i.e., example, if you're dealing with a client in America and what the process and reporting requirements are, and very much it will follow unless, of course, the deal and the trade arrangements come out something from the deal stipulated differently, which we don't know. But as of now, from your preparations point of view, so for that client, we said, well, it will be a supply to a foreign country, so it's zero-rated export services. It's B2B. As it stands, it's zero-rated, but you are required to do an EC sales list. That requirement drops off. Have I frozen again? Tariq, can you hear me?
Yeah, we can't see you though, Kaya. Now we can't even hear you.
I think, I mean, just briefly, because I was sort of involved with this, and I think just largely it comes down to, yeah, the supplies would be either zero rated or outside the scope. From a practical perspective, it's just which box in the tax return you complete. So I don't think too many changes there as things stand at the moment. But of course, if a deal is done, then we don't know what the reporting requirements may be around that. And as you know, what we do know is that governance around the relationship post the end of the transition period is around monitoring how things are done. So there could be an equivalent to an EC sales list and various other bits and pieces. But I think that's great. That's right, Kaya. I covered off that last bit. Luckily,
I'm sorry, my internet is playing up today, so apologies, everybody.
Luckily, I've been involved in that matter. But if it's not clear to anybody, you know, as we said, feel free to get in touch with us after this or raise a question. In fact, Rashmi, I think your internet connection is. Sorry, go on, Kaya.
Just a couple of other points. I don't know if you covered or not. I just wanted to cover that. The place of supply rules. Businesses must determine the country where a supply takes place for VAT purposes, so that they know where VAT due is payable. As things stands, there is a transitional arrangement available from January to June, and we are expecting it to change from 1st of July. We are familiar with MOS, the one-stop shop services for digital services provider across the EU. We are expecting a one-stop shop service for UK businesses selling into various EU countries. For the next 6 months, you have to look at the thresholds in each jurisdictions, and you will be required to probably register in each separate jurisdictions, depending on the level of business you do in each jurisdictions. But from 1st of July, it is expected a new one-stop shop will be available for you to report all in one go. But temporarily, at least until the first 6 months, you need to do that. And probably work should start on that like yesterday, because we are seeing 4 to 6 weeks turnaround time from various jurisdictions to get the VAT registrations locally there.
I think 4 to 6 is quite generous, to be honest. I think it's potentially worse than that. And some of the other implications, of course, is having a tax agent or tax representative in country. And those aren't easy to come by in all jurisdictions, because in some countries, they become jointly and severally liable. And so it can often be quite difficult to get a tax agent, tax representative in those markets. Again, all this hinges on what a deal may look like, because you know, it could be we just carry on as before, but most likely there will be some additional compliance burdens on us.
Yeah, and sorry, before I let you go, covering the final point also, reclaiming EU VAT. I mean, business who do incur VAT in the EU at the moment, there is a portal available as a unified regime. People traveling on business incurring VAT in different parts of the EU can claim via that portal. That regime is going to be with us until 31st of March 2021. And so far, UK government nor the EU has given any other indication that that will continue. So again, when you're doing the budgets and forecasts and planning, I think so it's prudent at this stage to factor that will become an expense rather than input VAT that you could claim at the moment.
Okay, great. Okay, thank you very much for that. Rashmi, I think your internet is good. So no
My internet is good. Hopefully.
No excuses. Don't drop the internet.
Exactly.
Well, over to you, Rashmi. Thank you.
Thank you very much, and good afternoon, everyone. So just like there's not going to be free trade post 1st of January 2021, there is equally not going to be free movement of people from UK to EU and the other way around. Just give you a perspective, there's 3 million EU citizens living in the UK. So what's the implications to them? And moreover, what's the implications of to businesses where we are employing these talented EU individuals, citizens, to help us with our businesses? And there are implications. But I think let's look at citizens as a whole, people who are living. There's two elements. One, we need to retain these people, or they want to settle in the UK and remain as part of the UK population. And then there'll be others post 1st Jan who will want to come in to the UK to settle, to work, etc. So what are the implications? What needs to happen is this. If EU citizens living in the UK, there's 3 elements. One, they may already have indefinite leave to remain. They've been living here for many, many years, and they've been given indefinite leave to remain. A stamp on their visa, a passport, I beg your pardon. Fine. They do not need to do anything. The remaining EU citizens have to apply for a settlement scheme, EU settlement scheme, it's called. And this application has to happen from now until 30th of June 2021. But just give you a sidestep on that. Any EU citizens population that would like to move to UK without having to apply for visas, etc., they can do so by 31st of December this year. So they've got about 12, 13 days to move as if it's free movement and settle here. And they will not require any visas, except they'll need to apply for the settlement scheme.
Yeah, they'll need to isolate for 14 days.
They'll need to isolate, yeah.
And they need to be able to travel through one of the corridors as well, the travel corridors. So
Exactly. But nevertheless, they've got 12 days to get here. If they already live here, they haven't got indefinite leave to remain status, then they need to apply to the settlement scheme, as I said, and they can apply for settled status, which is on the screen. And you can get settled status if you have been living in the UK for 5 continuous years. And 5 continuous years means living at least 6 months of the 12 months for 5 years continuously.
I think the application process is quite straightforward, isn't it, Rashmi? We've got a couple of staff ourselves at McAlvin's that are EU citizens and have already applied, and it was, I think it's a very, very straightforward exercise. So we'd urge everybody really just, if you've got staff, just make sure they've done it. Otherwise, you could be in difficulty from the 1st of January.
Exactly. Staff, friends, colleagues, acquaintances. Yeah, I would advise them, if they're not already aware, I'm sure they are, that they need to apply for the scheme. They can apply if they've already been living in the UK for a number of years, then applied status, otherwise pre-settled status, and then they'll get a settled status thereafter.
Okay.
Yeah, so that needs to be done by 30th of June 2021. And you must be living in the UK by 31st December 2020. Anybody after that, so anybody after 1st of January 2021 wishing to move to the UK will be in the same boat as anybody outside EU. So I know there's reciprocal arrangements going on, discussions going on in terms of, if you make it easy for us, we'll make it easy for you. And I think when reality settles in, it will be easier to obtain visas for EU citizens than non-EU citizens, simply because there'll be a reciprocal arrangements for UK citizens to go and work within EU. So these discussions are taking place. However, if EU citizens would like or wish to move into the UK beyond 1st Jan 2021, there will be a requirement for visas. They'll need to apply for a visa in advance of coming here. EU citizens will be able to, and basically in a nutshell, what will happen is there's two requirements. One, can you sustain yourself? I.e., have you got a job which you're coming to, a secure job, or are you going to be starting a business? And what the Home Office and the government is looking at is anybody who's coming in should be able to sustain themselves once they're here. So what the requirement is that they have a job offer from an approved employer in the UK, and an approved employer means that the employers have to have a sponsorship license to enable them to recruit EU citizens. Yeah. But so what do the individual require? Individual require a job offer from an approved employer. The employers planning to sponsor skilled migrants from 2021 should get a sponsorship license, and the recruitment and the enablement will be based on a points-based system, just like any non-EU person coming here. And what does that mean? They need to be able to speak English. They have to have a job offer. Requires if they're coming in on a skilled visa, they'll have to demonstrate what job they're getting into and what skills they have. Once again, there's criteria. They need to be paid at least £25,600 for getting that employment. And if it's less than 25,600, it's like trading points. If it's less than 25,600, then the job offer will have to be in a certain sector. For instance, there's a shortage of occupation in a sector, health services one, then they can get paid less but still get the visa. Yep. Next slide, please. Impact on overseas business travel. And this, what we're meaning here is people wanting to travel to EU on business. And once again, I was doing a lot of research into this. The rules aren't clear because certain countries are still having their own set of rules in terms of what it means to go in, do business, go and travel on business for a short term without having a work permit or a visa. And the basic requirements are saying that you need to have a valid passport, at least 12 months, 6 months, validity, 6 months validity of your passport. The passport should be an issue within sort of a 10-year time frame. So it shouldn't be a very old passport. You should have a 10-year time frame within the passport. Travel insurances should be in place. You need to check with the country that you're going to do business travel in, whether you need to pay social security contributions, and you need indemnity insurance perhaps. Once again, depending on the country that you're going to be traveling in, you need to check. It's not the number of days or how long you're going there for, but it's the type of activities that you're going to be engaged in, and that will determine ease of access for your business travel in that particular country, in a nutshell. But this is a complicated area, business travel, and wait and see once we move into the new regime as to what's determined by business travel, what's allowed, what's disallowed. But for short trips, I think there will not be a problem. It's when there is secondments and longer periods of business travel, that's when you'd have to look at it on a case-by-case basis.
So it's not really dissimilar if you were traveling to anywhere outside the EU. If you go into the US, you always ask, what are you doing here? Are you bringing any samples of goods and things like that? How long you're staying for, etc., etc. So That's the worst case scenario, I guess, but hopefully it'll be very similar to what it is if they get a deal done.
Exactly.
Thank you very much, Rashmi.
Okay.
So new opportunities. There are exciting opportunities on the horizon. It's easy to get lost in all the doom and gloom that has been reported around Brexit at the moment, but the new freedoms gained from the UK's departure from the EU will also open up new opportunities in markets. Already the UK has signed a comprehensive free trade deal with Japan, and in discussions to create a large agreement with Canada, Australia, and New Zealand. I just saw this morning about a mini trade deal with the US before the current government hands over to Joe Biden. So there's that, and I also saw another article about a free trade agreement being negotiated with India. I mean, that could take a number of years, but I mean, it's one of the biggest markets in the world, of course. So creating a large agreement with Canada, Australia, and New Zealand, the so-called CANS UK deal, or CANSUK deal, depending on how you pronounce it. With all this, however, the EU does still remain the largest trading partner with the UK, and a key goal, of course, is to get the deal done. So just very wrapping up, final checklist. So as the UK is yet to secure a deal, getting very close in my view, but we're still not there. Businesses must consider the following: the implications for VAT, the introduction of tariffs, the new requirements for importing and exporting goods, border controls, needs of EU citizens in their workforce, impact on supply chains, and various scenario planning. So you should really take time to review these points and consider the direct and indirect impacts it has on your business, and whether there is still time to put in place mitigation. Remember, if a deal is done, it does not mean that the deal does not impact your business and your compliance. Having a deal does not mean there are no changes. There will be changes no matter what. We're here to help. UK businesses face an uncertain period, full of variables that could affect their income and ability to trade. We are already supporting a number of businesses with their preparations for Brexit and are standing by to support you. And should you have any queries or require any form of support, if you just get in touch with us. If you'd like to know more about the impact of Brexit may have on your specific business and how we can help, arrange a consultation with one of our team, or reach out to one of us, and we'll make sure to connect you in the right way if you're not an existing client, and we'll see how we can assist you. So we did have a slot for Q&A, but we are literally already overrun. I think we addressed one question that came up. Any others, please, as I say, reach out to us. So thank everybody for joining, and to Rashmi and Kaya for contributing, and also for everybody putting up with a slight hitch with our connectivity. Thanks also to our marketing team, and we welcome your feedback on this webinar and all future topics, for that matter. We want to be talking about things that are important, are relevant for you. So do get in touch. You'll receive an email shortly from our marketing team, which, if you really, really want to watch the webinar again, then there's a video link there as well. So leaves me to say, wishing you all a very, very happy and relaxing Christmas if you're celebrating, or break if you're not. I hope you all get time with your loved ones, and all the very, very best for 2021, with or without a deal. And above all, stay safe. So thank you very much.
Thank you.
Thank you. Merry Christmas, everyone. Happy New Year.
Thanks. Bye all.